I just mentioned, looks like we are going to end the week, in particular for the Dow, in the positive. Dow is up 221 right now, as you can see. But certainly we're going to be watching what's happening over in Europe. It looks like we've got another delay hitting the continent. We'll go to those markets in a moment for you. Taking a better look at this rally right now, we're at 11,762. Those European leaders could disappoint. Monday could be a different story. We will take this, though, for right now. Also, we're watching shares of McDonald's. The stock actually doing very well. That stock hitting an all-time high. We're going to talk about the McDonald's economy. Nicole Petalini is watching that stock for me. Plus, he was just talking about it. Steve Jobs warning to the president. Will he be a one-term president because of increasing regulation? Are businesses still looking to leave the United States? We're going to discuss that during the hour. And, well, that's me. That's me in San Francisco at the marathon. Coming up, we're going to look into the big business of marathons. That's when I used to enjoy running marathons. Things hurt a lot more the older I get. But anyway, hi, everybody. I am Cheryl Casoni, and joining me for the hour, he's actually a triathlete. We just did one together. James Frischling is with me for the hour. He's the co-founder and the president of NewOak Capital. And another triathlete did it with me 2 years ago. Steve Jelsey is here. So the athletes are all on board today for the big noon show.
Yes, indeed.
A little more battered, a little more beaten up. We try, though. Anyway, we begin. Okay, I want to bring it back down home and talk about some of the earnings that we've been kind of going through. And I want to take this to James first because again, we just talked about it. McDonald's, Verizon, GE had a decent quarter. The stocks are under a little bit of pressure, though, because of one of their core businesses. Overall, though, it seems to be U.S. earnings that are taking this market higher. We're kind of putting Greece and Europe to the side for today, at least.
Well, I actually think it's a combination of the two. I think at home, 70+% of the companies reporting have beaten estimates. I think maybe some of the macro headwinds had forced analysts or caused analysts to kind of lower some expectations. But again, the earnings are very good. Companies continue to do well. And as a result, I do think that's an important, I guess, very local force on the upside. But I do think that there is now the conviction that Europe is going to do something. And while I very much agree that the devil's in the details, the fact is they're going to come out with their own bazooka and the details to be sorted out a little later.
It's the pig markets. All right, Kevin. And a shocking revelation in the biography of Steve Jobs, which is about to be released. Author Walter Isaacson says that Jobs warned the president that he was headed for a one-term presidency. Jobs telling President Obama regulations and unnecessary costs put the United States at a competitive disadvantage with China. And couple that with this, the administration, President Obama's administration, approved a $529 million federal government loan guarantee for a company that will reportedly assemble those electric cars overseas. It was Fisker Motors. Here's the company. They say that engineering design for the car is going to be done in the U.S., but reports of the cars are going to be assembled by workers here in Finland. So overall, is overregulation forcing U.S. companies to move those jobs overseas? Steve, let's go back. Let's go to Fisker first. Okay.
Yeah.
Go to Fisker. Because
Finland
this just broke.
Since when is Finland the low-cost labor capital of the world?
Now, here's what the CEO said. Now, the design, and the CEO has said, and this is all in the reports that are out, that it was designed here in the United States, and that they didn't have the proper facilities in the U.S. That's why they're assembling it over in Finland. But still, we've given them $500 million. Is that correct? Is that the right thing to do for our taxpayers?
Well, we're trying to get the auto industry back off the ground. And this is one of the things. I mean, we haven't had a startup auto company since Tucker Automobiles, and now we have Tesla and we have Fisker. So the U.S. government is trying to get those two off the ground a little bit with a little bit of help. I mean, you know, Jobs have been moving overseas for, you know, since before Obama. So they've been moving overseas since before Ronald Reagan was president. But you do, you know, you want to see a really positive environment as you can. You want to try to reduce regulation. And it's really fascinating to hear that Steve Jobs was concerned about that. But he still did want to work for Obama's re-election campaign. So he's a little, you know, conflicted and complex, as he always is, a little puzzling.
But in the excerpts of the book that are now starting to come out, he had a lot of back and forth with the president. And there was some tension between the two. But
was there anything specific on what regulations he didn't like, or is that just hasn't
the quotes are coming out. The book is not released. We're just finding out the early excerpts.
The environment is too regulatory.
Right, and that is a good point here. Is that, you know, we've heard this. I've heard many CEOs come on this show and say that I'm concerned about regulation, whether it's Dodd-Frank or the Volcker rule. But they all come on and say, I don't know what regulatory environments are going to look like in the next year to 2 years. These tax breaks that I might get are temporary. So they're saying, I'm not going to hire. And that's, I think, the concern that Steve Jobs is actually voicing here.
And that's the uncertainty that I think we touched on earlier in the show. You have the regulatory uncertainty, the tax uncertainty, you have the healthcare issues, you have a question of leadership both here in Washington and certainly abroad. And all of that, in speaking to a number of business leaders, is kind of causing them to hunker down. So they're playing it conservatively, building up cash positions, looking at maybe some M&A type of investments, but to a certain extent, they're really not hiring because they just don't know what next year will bring. And going into an election year where our president is, to a certain extent, taking a somewhat divisive strategy, a re-election strategy, again, I think there's the thought that we might kind of continue just to slog along, and that's not a great environment for investment.
But, you know, American companies, Steve, cannot, at this point, still cannot compete with labor costs when it comes to China. We just can't do it. Which, look, I mean, the Chinese, a lot of these workers live a very disadvantaged lifestyle. So fair enough, we have a very good life here in the U.S., but still we're losing economic prowess to that country.
Yes.
Jobs said it. Many people say it. I mean, are we overall losing our mojo, basically, in the United States?
I don't think we're losing our mojo. You know, I just did a short article today about venture capital investment. It was up in the third quarter. So we have a great system in this country for supporting startups and getting investment money into startups. We have a lot of good innovative ideas. The sun is not setting on the U.S. just yet. But you're right. I mean, the issues you're talking about, the uncertainty over the banking regulations and over other types of you know, legislation, the healthcare legislation, it's like a weight around our necks right now, and there's no real way to get around it right now. We just have to slog through, it seems like. And the earnings have been really good from corporations as well, but corporations are putting away their money, they're buying back stock, just like Americans are. Americans are putting away money, they're not buying back stock, but they're saving their money.
Wells Fargo had said, Jim, that savings rates were actually up, but loan amounts were up by like 1%. So they'd actually seen a decrease in the amount of loans that Americans were taking. They're customers.
People are dialing down any kind of risk.
Seeing, Jim.
Again, I think globalization and some of the, you know, the structural efficiencies, companies are doing more with less. That does not bode well, again, to a certain extent for a binge in any kind of hiring. So Steve Jobs was right to talk about globalization being a threat. You can find cheaper labor elsewhere. You know, I don't think the U.S. has lost its mojo, but I can't help but think of kind of, you know, Rocky Balboa and Rocky III when he's the top of the boxing world. He lost a little bit of his competitiveness. He lost a little bit of his edge. So to a certain extent, the kind of the threat was, let's get that back. So
talking like the true triathlete that you are, Jim Frischling. Well, you back here in New York, we continue to look at a market rally, and even though the Dow is off of session highs right now, we're still up 197 points right now, and a lot of this is earnings. I do want to point that out as we look at the Dow, the Nasdaq, and the S&P. We've heard from McDonald's, we've heard from General Electric, we've heard from Verizon, a lot of big name companies. Jim Frischling, thank you for standing by as we took those live remarks from Washington. But back here in New York, looks like we've got a positive day, the way to wrap it up. Does this make you more bullish? Because you've been a little cautious lately about that.
I have been, and we've tried to look at or make recommendations based on companies that have moats around their businesses, good global distribution channels, a real consumer, you know, value add and presence. We've talked about things like McDonald's and Merck and Procter and Gamble. Merck from an aging population and kind of the need for, you know, healthcare. But I will say right now, I think given the urgency of Europe and the kind of the idea that they're going to take action, it actually does give me a little bit more of a bullish sentiment that if they actually do throw enough money at that problem, I do think the equity markets here at home have a chance to move further.
I got to give you a chance here because, and we didn't get to it fully, but you did tell my producer that you liked McDonald's. You did give her some picks before the show began, and you were looking at McDonald's, Procter and Gamble, and Merck. So these are companies you're telling our viewers that you like.
That's correct, and to a certain extent, again, just because of the franchise value, the distribution, the global channels, and then while I know the financial sector is a little out of vogue, and it's easy to dislike it, we have been talking about some of the regionals and some of the large and super regionals, the PNC, the U.S. Bancorp, the SunTrust, because the banking system does need to be the grease that kind of keeps pushing this forward. So we do like the regionals. Regional
banks like BB&T, Key, PNC. What about Wells Fargo? I don't know if hard to call that one a regional bank, but
I was going to ask you about Wells Fargo.
What do you? Okay, talk to us about that.
I'm torn because certainly from certainly a super regional, but again, I think they own some of the risk right now that some of the other large U.S. Operations face. A lot of litigation, a lot of again, still to a certain extent, a lot of discontent with these large platforms. So to a certain extent, less about that and more about some of the others I just mentioned.
Steve, you know, as we look at the banks, the regional banks, we look at the larger banks. Again, you mentioned this earlier that we'd heard from Goldman Sachs.
Bank of America.
You did make a funny comment, yeah, about the fact that, gosh, we hear from Goldman Sachs they've lost money, and still we bid up this stock.
Sure, sure. You know, I mean, but what a week this has been. You know, I mean, we had Libya, we have Iraq, and now we have the Groupon IPO as well.
I know, that's true. We didn't get to that today.
I don't know if it's in the same ballpark, but it's been a really big week for news.
Yeah, I need another hour to talk about the stories that we didn't get to, and Groupon's a good one. And I have to ask real quick, Jim, do you last word on M&A? Do you think we're going to get more M&A? Do you think we're going to actually see some nice IPOs hitting the market like a Groupon? I
do think, given the cash position, it's really quite a mountain of money has been is stockpiled. I do think we're going to see more of that, and as some of the other headwinds at least are contained, I do think you're going to see more opportunities.
Jim, I have to apologize to our viewers on behalf of myself that we did not get to the Marathon Chicago story, because we had pictures of you actually doing marathons and triathlons and everything. I got two great athletes with me today, but we'll bring that was our on the road segment. We'll bring that back another time, and we'll get Jim and Steve back as well. Guys, thank you very much.
Thank you.
Well, coming